The following is a presentation of TFNN. Now, the author of Mastering Probability, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the June 13th terrific Thursday edition of today's Opening Bell on the Trader's Edge. I'm your host, Steve Rhodes, and I absolutely treasure your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with tools, well, just simply tools that help you to inspire yourself and others, folks, because living an inspired life, that is what it's all about. So let's go look at one of our tools. This is the tool I call Defeat Isn't Bitter If You Don't Swallow It. Now, at one point in time in our lives, and maybe it's several, we've experienced failure. I know I have. I'm sure that you have as well. And the markets, they certainly experienced a colossal failure yesterday. We're going to take a look at that in a few moments. And in our lives, the more often that we are willing to risk trying a new approach, maybe a fresh concept, the more likely we may be to experience failure, at least in the short run. And that, folks, that is the key, because it's only in the short run. You see, it isn't easy to succeed when we first try something new, or first try something that's very ambitious. And if we're afraid to fail, well, we just simply may be hesitant to take risks. I mean, that's what trading is really all about. Yet if we dare to step forward, if we just simply, how about this? If we don't step forward, what's going to happen is we're going to stop growing. And if you're not growing, what happens? That's right, you're dying. Growth requires the willingness to risk defeat, folks. Think about it like this. Maybe some of you have got grandkids, little babies, and if as toddlers we were afraid of failure, few of us would have learned to walk. How about talk? To learn to walk, we had to be willing to fall down and at times scrape our knees, bruise our shins. Confucius once said, our greatest glory is not in never failing, but in rising every time we fail. Think about that. You should write that down. To be successful, to be victorious, we must be willing to risk failure. But the important lesson to learn is failure is not defeat unless you let it be. Everyone can improve himself or herself regardless of the situation, regardless of how good you may be right now, regardless of life circumstances. You absolutely have the power to accomplish anything that you want as long as you make your mind up to do it. In the process of inventing that electric light bulb, it was said that Thomas Edison tried and failed over 1,000 times. Think about that. She tried and failed over 1,000 times. He was asked if he grew discouraged by all of his failures and whether or not he considered giving up. And his reply was something like this: those steps on the way, and in each attempt I was successful in finding a way not to create a light bulb. He was always eager to learn, even from his mistakes. I think, folks, that is the best way to live. Let us always remember that defeat isn't bitter if you don't swallow it. Let's go check out the markets here. What a wild ride we have had over the last several days. It is going to remain the same. That is the forecast. Right now, Dow Futures just slightly positive, up 2 points, trading at 14,980, certainly off of the session lows. For all of you folks that maybe were up to the wee hours of the morning, like myself, unfortunately, so I haven't had a ton of sleep here. Not so much because of the markets, although that was kind of a nice, interesting sideshow. It was really more about that Blackhawks-Bruins game. Triple overtime. I found a second wind, as so often I do, second, third, fourth wind out there. And that game went till 1 o'clock in the morning Eastern Standard Time. So a great game out there, whichever side of the coin you were on out there. And so I hope it's going to be a great 7-game series. That would be nice. In any event here, we've got the S&P futures up a couple points at 1612 right now on the June contract. That rolls over today. You've got the NASDAQ futures up about 5 points at 29.25. King dollar almost flat here, back about 6 ticks. A lot of movement inside the Japanese yen, U.S. dollar currency pair. there. We'll take a look at that. You've got gold trading up $13 right now at $13.79. Silver down 8 pennies at $21.71. Light sweet crude down 13 pennies at $95.75. Of course, if we take a look across the pond, let's just start over here in Europe this morning. Right now, the DAX is off 62 points. The FTSE off 18. Now, that's important for us to take a look at. The FTSE's only off 18 points, and that we know over in Europe is one of the weak indexes out here. So we're going to look at weakness and see if we can see some strength. Over in Asia last night, now that was the trip. You had the Nikkei off 843 points, down 6% last night. The Shanghai, the Hang Seng coming back off of a holiday, and they were down about 3%. We had the Shanghai off 3%, 2.83% off 65 points last night. The Hang Seng off 2%, down 467 points. Our call number, you know it, 877-927-6648. Now, yesterday, we started off at some point in time, we started off taking a look at this chart here. And that was a 105-minute chart. I don't remember why I had that as a time frame. I know that there's a reason. I just can't remember why I had 105 minutes as a time frame in my one of my time studies out here. In any event, what we've got here is the ES Mini coming off of the April lows out here. And we're going to take a look at the change in psychology of buying the dips, okay, or selling the rallies. And right now, what we are in, and it's simply the change in trend. You know, there's folks out there, is clearly a change in trend in the marketplace. Nothing could be more clear, at least in my eyes, nothing could be more clear than yesterday's action. You know, we did have that one-day VIX percentage increase above 10%. It was a colossal failure yesterday as well. Worked well early in the morning and identifying the bounce, but really when you take a look at that, we will look at that at some point in time during the next couple of hours, because we're going to go back into the 2007 marketplace. We'll take a look at all of those one-day VIX increases above 10%, greater than 10% out there. But yesterday was a colossal failure, because what we saw yesterday was we are now in a market of selling the rallies, not buying the dips. So we can just take a look at this chart here that I've got on my screen. If you are following along on Tiger TV, thanks so much for doing that. Maybe you're listening in on TFNN.mobi or a radio station. We absolutely appreciate that. Remember, this show streams live by going to the homepage of TFNN.com. It'll stream live to your smart pad, your smartphone out there. You'll see a little button over on the right-hand side with 3 smartphones on it, and go ahead, click on that. The show will stream live, and you can always get the archive on Channel 9. So this is certainly a market about selling the rallies. On the left-hand side, you're seeing each of the dips out here. If I've got a yes buy it means if you had bought that dip, you would be okay. Well, we've got to get rid of a couple of them. We've got to get rid of this one here back around the time frame now of May 14th out there. And so that means a month ago. A month ago, if you had bought the rally out here, in fact, you've got May 9th. Oh, how about that? A little bit more than a month ago if you bought that rally too. So all of these rallies that you could buy, though still intact here right now, seems to be May 6th, at least for the day. But slowly but surely, they're starting to topple over out here. And so buying these dips, it's about as clear as you possibly can get by just simply taking a look at this chart. You can go do it. You can put it on any time frame. It'll help you. And all you're doing when you're saying we're taking a look at dips, we're just looking at the swing points out here. Now, what we took a look at yesterday, and what I've drawn in here are the channel lines. So yesterday we were just looking at the trend lines. We were just doing it live during the show. But, folks, if you would like to understand, and you should want to understand channel lines, tonight Bud Rolfs is doing a workshop out there. All the details on the homepage of TFNN.com. You absolutely want to make sure that you've signed up for that workshop. It's a small investment that you would be making in yourself. You want to be able to learn this from the master out there. So go sign up for that course, and all the details again on the homepage of TFNN.com. If we take a look at those channel lines, whether it's channel lines or trend lines, what we clearly can see here is the top of it. You know, yesterday it was really the trend. I'll go ahead and draw the trend line on here. We'll come from that little spike high that came in on May 22nd, our next touch point out here. And I'll go ahead and turn this to a black line out here, make it a little bit easier for you to differentiate, make it easier for me to differentiate as well what we are looking at. But if we take a look at that trend line and the channel line here, we can see yesterday that price got right up as that rally was unfolding as we came into the market. Price got right up into that trend line and then gave it up. It should not have done that, folks. Well, I can't say it should not have done that. We're in a downtrend, and it did that, and that's what's the most important thing. So now the key is, okay, where is the next rally going to take us to? And we're going to go ahead and we'll take a look at, in fact, even on this chart here, we can take a look at a couple of different options. Number one, I'll go ahead and start to pull this back. We'll open it up a bit here. We can see here that this morning, interestingly enough, a price stopped, really, if you take a look at the body of the candle, price in essence stopped at 3 o'clock in the morning, right at the bottom of the price channel. So is this a place where you could see a bounce? Yeah, and we're seeing it. We're seeing it with some bullish candles out here. If I go ahead and I put the relative strength index on here, we'll see that what we're doing is we're certainly bouncing out of a very extreme oversold condition. We know that we want to use an indicator like this. There are other indicators. Some use the stochastics or what have you. Many of them really do the same thing out there, but let's just take a look at one of Steve-O's favorite tools, especially in identifying divergence out here. So you're coming out of an oversold territory. It has to work its way off. Now what we resort to is just simply taking a look at normal retracements, and retracements here we're just simply going to come from the swing point high. Right now that's going to be coming in at 11:15 in the morning yesterday, all the way down to the low out here that came in at 3 o'clock this morning out at 1597.50. You can see right now what has been done, what has occurred as the market has made a 0.382 retracement. It's gotten up to the 1613 level. We know that that is the first floor out here. So as this market opens, when we come into the next 11-minute session out here, we'll see if the bears are just simply camping out here, or are they more likely camping out around 1622? Or really, are they really camping out all the way up here at the top of that price channel line? We'll know because they cannot hide. They just simply cannot hide. They reveal themselves in a candlestick. And that, folks, is real power. 877-927-6648. We'll be right back.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Are you looking for a precision edge in the market, something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Yesterday, during the, I believe it was during the second hour, I was fortunate enough to get a call from John from Sarasota. We were exploring a couple of different gold mining stocks out there, and I can't recall what else we were looking at. But one of the tools that I shared with John, if you were listening in on the show, and I didn't realize it was on the screen here, this is the, I'm taking a look at the June contract. Lost my brick. Uh-oh, this could be a problem. Okay, we got it back. Okay. So thick as a brick. In any event here, this yellow box, if you are watching us on Tiger TV, first of all, if you're not, let me explain to you what I've got going across my screen. Four moving averages, four exponential moving averages that I like to use out here. One is the 8-day, or 8 period, I should say, because it's not a daily chart that I'm looking at. So an 8 period, a 21 period, a 50, and a 200. And what's really great to look for is this, what I'll call it, a rainbow convergence. I don't know what else to call it because I've got 4 different colors out there. And when you see these convergences, and we had one occur right here at 11 o'clock, so as we were going off the air, as I was going off of my show, Basil was coming on, there was that convergence that took place. And then there was that explosion of price. And you really want to be paying attention to which side is price exploding on. Now, Basil uses the 9 period, but I'm using these moving averages, this rainbow convergence, differently, than the way that I think it's differently than the way that Basil does it. And so what's kind of cool, so if you are listening out here, what's great is I can show you another real example of what it is that you should look for. Now, whether it was the ES Mini or it occurred also on the NQ out here, you saw that exact same little rainbow convergence out here. And so use this as now this is a lagging indicator for sure. Now, because it's a lagging indicator, when you can get all these moving averages to converge at the same point in time, it's also very powerful out here. And so that's why you want to be paying attention to which way is price exploding. Doesn't mean that it's going to stay in that same direction, but, may jostle around. So be willing to go in and go out. What you're doing here is you're searching for treasure out here. You're always looking for clues from the market. Just as you're looking for, I'm sure by tuning into the show, you're looking for clues. Hey, what's going on? Let's take a look at the NQ as long as we are over here. Let's go from the top to the bottom. When we had that rainbow convergence occur, the swing point here at 10 o'clock. Yesterday morning out there, nice little bearish engulfing in that candle as the market began its sell-off. So if we take a look at the NQ, it's almost back to the 0.382 retracement level. That would be 29.28 out here. Normal bounce in this marketplace will take it up to sweet 618. That would be the 29.48 level. What you want to be looking for in this market, in my opinion, you want to be looking to sell any rallies out here. Now, does that just mean that you blindly sell them? Of course not. You always want to make sure, in my opinion, you always want to make sure that you've got some other kind of reversal pattern that is going on out there. Certainly this market here on the 30-minute chart, you can see, started to move up, even though we're just to the 0.382 level, started to move up into that overbought territory. So we're going to see here very shortly if we start to see a sell-off. If we do see a sell-off, knowing that the only rally that we've received so far and working off this very, very oversold condition is a 0.382 retracement, that sets up another huge leg down. Huge leg down. They're going to have to get through the bulls, and we'll see, how well these bulls are defending their territory. That's going to be on the NQ. That's going to be right around the 28.97 level. But if you're looking to get short, what you want to do is you want to wait until you see a bouncer. You'd like to be able to sell this rally. Now, this is a 30-minute chart out here. What we're going to do is I'm going to go switch over into the currency pair, because if you say, why is it, after the big sell-off in Asia last night, after yesterday's pop and drop, why is it that this market could actually bounce? Why could it bounce back to those levels that we took a look at here on this, for example, this 105-minute chart? How could it really get all the way back up to the top of its range out here, meaning the top of that descending price channel? Well, let's go take a look at the currency market, because from the currency market, it's where we're going to be able to get the biggest clue. And that currency market, as you know, that we're going to look at is the Euro Japanese yen. And that is the 30-minute chart that I've got on my screen. And what we can see here, as I pull this back, you are seeing two butterfly sell patterns that are converging, that have converged at about the same point. Now, we're going to say about, they have converged at the same point. The larger one, this is coming off of a low that was put in at 2,200 hours back on April the 28th. You know, we use April 28th as one of our swing points that we're taking a look at, or the April swing points to take a look at from low to high. We'll take a look at this in the euro. This has just completed in the 125.22 level, and you can see the euro Japanese yen got down to a low of 125.11 out here, and then the bulls came in with this bullish engulfing candle. This is one of the reasons, because it's the currency market. We come back, we'll take a look at this after the market opens.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Tom O'Brien's daily newsletter, Market Insights, gives you Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. With Market Insights, nothing is left to guessing. With the market at record levels, volatility is here, and now is a perfect time to take advantage of a 2-week free trial to Tom O'Brien's daily newsletter, Market Insights. As recently as March 26th, Tom advised his subscribers to liquidate their 4 short-term equity holdings, closing out all 4 positions for a combined 15.9% profit. And on April 1st, Tom advised his clients to sell their longer-term position in AIG warrants, locking in more than a 40% profit in just that one trade. If you'd like to see the kind of newsletter Tom O'Brien sends out to his subscribers each morning, then sign up for your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. The Art of Timing the Trade charts has officially launched at TFNN. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind software, the art of timing the trade charts allows you to scan for Fibonacci formation setups, including Gartley's, butterflies, ABCs, and much more. The art of timing the trade charts is designed to help you when scouring the market for stocks just beginning to form the trading patterns that many investors spend days, weeks, and even months searching to find. As part of our introductory pricing, we're offering licenses available at only $59 per month. We're so confident that you'll love this new outstanding piece of charting software that we'll even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Lock in your low price today by ordering your copy at TFNN.com. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're off to the races. We got the Dow up 28 points. Traveling out at 14,966. S&P down 2.5 at 1609. Composite off 5 at 3394. Russell 2000 just barely. It's now down a buck at 971. Google's off $3. Apple up 51 cents right now. Microsoft down 16 ticks. Intel up 5. Cisco down 2. Leading the charge to the upside. PVH Corp. PVH is up 9% this morning here. Let's see, on a must be a release of earnings. They're see if I can find their numbers out here for us. They did. All I can see is their per share loss right now. Looks like 25-cent per share loss versus a profit of $1.30. Boy, these guys must be guiding nicely. They're up $10 and change. We've got Safeway out. I believe they sold their stores in Canada last night. That's up 14%, up $3 and change. Gannett GCI is out there, is up today, up 28%. That is on a $300 million stock repurchase program. Bello Corp, BLC, they're up 27% out here. Again, expects Bello deal. Okay, they're going to be, again, it's buying Bello. So there we go. Let's see if we get the Spread Trump Communications, SPRD. That is a mouthful. They were out with revenues, although I don't see them on my screen out here. They are trading up a nice 11% this morning. Sinclair Broadcasting, they are up about 6%. To the downside, we've got ABBVIE. You pronounce that. ABBV is their ticker symbol. They're down 3% here this morning off $1.56. First Solar, FSLR off $1.32. Green Mountain Coffee off $1.10. Illumina, ILMN off 88 cents. So not a lot of damage here to the downside here just yet as we have the market open. Now let's go back here and take a look at the Euro Japanese yen, because this is important to be paying attention to. Now, it is a 30-minute chart that I've got up on my screen, but on the 30-minute chart, what we see forming here are two 1.272 butterflies, one large one, one smaller one. The smaller one is coming off of the swing point from 9 o'clock in the morning, June 7th. That's the low out there, so your expansion is going to be from that low to the high that was put in here at 18:30, so it's 6:30 in the evening on June the 10th. Now, that actual number to complete is down just a tad lower than the low that we saw this morning, right around 124.75. The low that came in at 9 o'clock was right around 125.16 out there, so pretty darn close. So we've got two patterns here that are completing, two expansion patterns, and also these are coming from a oversold condition. So it is normal for these two to let the air out of its balloon as opposed to letting it burst and seeing a retracement here. A normal retracement, if we just take a look at the smaller pattern, would take your bounce. Well, the easy bounce would be up to 127.47, but more likely sweet 618. That would take you up to 128.92. And that's important as we take a look here. Let me see if I can switch over to the daily chart here. And I've got the daily chart up here. And on the daily chart, what we saw were two expansion patterns to the upside that were signaling to us that the move to the upside inside the Euro-Japanese yen was over. That was completed here on May 22nd. Sound like an important day for us to be paying attention? Yeah, we had that key reversal session inside our markets. Now, if we take a look at this, you can see what has taken place. We're going to take a look at two patterns that have completed so far this morning inside the Euro-Japanese yen. We'll put a black line across my screen, and that black line is measuring the swing point low from April 16th to this morning's. What we have here is a 100% move of the Euro-Japanese yen coming back and testing that swing point. So that's one pattern that's completed on the daily basis to the downside as we took a look at those expansion patterns on the intraday charts out here. Now let's go take a look at coming off of the larger butterfly sell pattern. This would be coming off of the February 25th low out at 118.70 all the way up to the high that was put in here, that May 22nd day. And you can see that just below the 100% move of a move at 124.47 is sweet 618, a normal retracement of these patterns out here. So on the daily chart, what we've got, and you're moving down towards the oversold territory. It's not oversold here just yet, but close enough. So on the intraday charts, what we see are two patterns that should hold as support. What we see on the daily chart as well are two patterns that should also hold as support. If, in fact, these patterns hold as support, and this is why we want to pay attention to it, then what we will see is we will see a rally unfold. That then can take us back into that larger term time frame that we were looking at here. I'll just simply go back to the 105-minute chart, and what that would say is you could see a move up to 1622, 1629, even up towards the top of the range out here. So you're going to want, in my opinion, you're going to want to go ahead and keep the, if you can, keep the Euro-Japanese yen currency pair chart, like on one side of your screen, as well as the whatever it is that you might be monitoring, whether it's the S&P futures contract, NASDAQ futures, and if you can keep those two things out there, because that correlation, I don't know that it's tick for tick, but it is a great correlation with regard to our markets, the S&P, as well as that's the correlation. And so that's in my opinion. As we take a look at, and you're saying, hey, Steve, even as bearish as we need to be in selling the rallies, the question is now, because what's important for us to do is figure out where is that rally going to occur? Where is that next rally that we should sell? And in this case here, remember, when we're taking a look at this is a 105-minute chart, we'll go back to the shorter-term chart, that what the market did here, what's important for us to pay attention to, is the normalcy of the market here. And what the market did was it bounced to that 0.382 level, 16.13, and when it got up to that, and that's coming off of the high from yesterday where the market started to sell off. When you get up to that first level, what should you expect? Should you expect to pound through it? No, you should expect to let some folks off of the elevator. It's like anybody who gets on an elevator. In this case here, there are people that are going to get off on floors. Those folks that might have bought in when there was a 100% move of a move, by the way. If we take a look at this 105-minute chart, if we come back to last Thursday's swing point low at 1 o'clock in the afternoon, the ES Mini traded down to 1596.50 before the bull stepped in. Who are those bulls? Who cares? Who doesn't really matter who they are? You just need to be able to identify where they're at. That way it helps you to identify support and or resistance out here. And then it's a matter of taking a look at bounces and understanding what normalcy might be. So this will be a complete colossal failure. A colossal failure if this moves lower this morning and doesn't get above the 0.382 and doesn't get up to that 1622 level, because all that we will have now seen would be a 0.382 retracement of a fairly large leg. We're going from 1638 to 1597. You're talking a 41-point move inside the S&P. Now, what is it that I think will unfold here? Maybe that's the real question. Well, I think I gave it to you, or I hope I did. When we took a look at the Euro-Japanese yen, it says it wants to bounce. And if that wants to bounce, because those patterns are complete, guess what? This market wants to bounce as well. And where will it bounce to? That I don't know. I know that that's what we have to do and pay attention to those two charts. Where's the logical areas for this to bounce to? Well, 1622, that is on the, we're going to have to roll it over into the September contract out here. In fact, I'll just go put that up on the screen. Now, I don't have the 105-minute chart out here, but what we can do is we can take a look at the 30-minute chart, and so your areas here are going to be 1617. Then what you're going to run into right up there is that 200 period exponential moving average. That's hanging out right around the 1617 level as well. You get above that. If you get above that, if the market gets, not you, the market gets above that, then it going and making a 0.786 retracement at 1623. That is a game, and certainly making that 100% move of a move at 1632 would also be out there. So that's what's going on inside the markets. That's what I believe that we need to be paying attention to, and it's putting those two things together. So I hope that absolutely helps you out in this marketplace. Now, let's go check out what went on around the world, because that is certainly something to behold, just as that hockey game. What a great hockey game. Now, I am a Detroit Red Wings fan, so, I don't have any skin in the game other than on behalf of, Mr. Tom O'Brien. So I'll go ahead and pull for the Boston Bruins out there, and it looked like they were going to shellac the Chicago Blackhawks. But what a great hockey game. What a great hockey game. The unfortunate thing was the mere fact that it was over at 1 o'clock in the morning, and my eyes aren't usually used to that. In any event here, let's go take a look at what went on around the world, because I had one eye on the hockey game, really 1.5 eyes on the hockey game, and the other half of the eye was on the world markets and what was going on. So let's go peek in on the world markets. And let's start off with the DAX here. We'll go to the FTSE, and then we'll go over to Asia. So what we've seen here this morning in the case of the DAX is actually gapped down this morning. You can see the bulls are stepping inside. So we got Super Mario at work this morning here, trying to stave off any very nasty move lower here, and that's all it is. Just going to be staving off that. What has happened here is coming off of that same important November 16th low to the high that was put in here on May 22nd as well. You can see it's made that 0.382 retracement. So gap down this morning, and I don't have the volume on this, but it's down to that 0.382 level, and that's a normal place where people would get off of the elevator out here. And so this is moving a bit higher, so that's a positive, even though you've got the gap down. If this thing gets back inside today, so if we come into 11 o'clock today, I think it's 11:30 when the DAX closes. I apologize, I don't recall specifically whether it's 10:30 or 11:30. But if it closes inside 81.22 and closes that gap today, that will be giving us a piece of information out here. Let's go take a look here at and that piece of information would be more of on the bullish side out here. If we go take a look at the FTSE here has been real weak inside the UK. Right now you got a hammer candle. What the FTSE has done is the FTSE moved down this morning and found support at that 200 period, 200-day, because we're looking at a daily chart, 200-day exponential moving average. We can see, with the exception of two trading sessions, November 15th and the 16th, well, that makes sense, right? Because the market then really bounced out of that. The 200-period exponential moving average, this is the first time that it has been tested. So that area now is holding as support, and this is one of the weak hands out here. So if that area holds as support, that supports a bounce inside the marketplace, and that's what we're seeing at this stage. You've got the FTSE, and I know it's hard to believe. Maybe it's hard to believe. Maybe it's not out there. But this is just really looking at the charts, forgetting about all of the other stuff that could impact our thinking. If we just flush that out, just take a look at the charts, just take a look at normal patterns and normal tools that we use out here, and then make our trading decisions, then that gets rid of any. In fact, what you want to make sure that you're always doing is taking a look at both sides of the trade. So what would be the bearish side here? Clearly breaking that 200-period exponential moving average inside the FTSE. And we would want to know that. We would want to know that because we could be taking our lead from Europe if this area here fails. Because we know there's colossal failures over in Asia. We'll go take a look at those. So the candle pattern that it forms today, and if the FTSE holds, as we'll call it, the 62.16 level, that quite frankly is setting up, a bounce. And all it is, it's a bounce to sell. I'm not saying that you should necessarily go long here. You can just make sure that use some tight stops here. Your back is really up against the wall, so it's a ideal time to take a short-term bullish position. But the reality is, if you want to trade in the direction of the trend is your friend. Well, then that direction is just look for the rally and then try to identify the spots where you would go ahead and take your position or build the position. Use a wide enough stop out there at your first entry point to go ahead and build that position, because the trend is your friend. We saw that on that shorter term, 105-minute chart out here. If we pull up the McClellan Summation Index, we take a look at the New York Stock Exchange out here. We can see on the NYSE, it formed this last Thursday. It formed the Gartley buy pattern, got down to a low of 91.37. So far, the low today, 91.73. Hey, maybe the New York Stock Exchange is dyslexic. Maybe it thinks it already tested the 91.37 because it got down to 91.73 out there. What we can see here on the bottom of my charts, you've got the summation index. That is pointing down like it is one of those ski jumps out here. Take a look at that ski jump here. So we'll see if the bulls are going to go ahead and take off and try to fly and make a little bit of a retracement out here. I've also got the oscillator, which quite frankly made a low yesterday. The reading on the oscillator, minus 302. On Thursday last week, we were down at minus 330. Folks, hitting those levels of minus 302, minus 300, we've actually only, since 2001, only seen like a dozen. I think today's or yesterday's makes number 13 out there. And those are normally really good buying opportunities. I don't believe that this is necessarily the case here right now. Bounce opportunity, that's a different thing versus putting in a real bottom in the marketplace out here. But a bounce opportunity, yeah, absolutely. So even the oscillator, in McClellan oscillator supports a bounce out here because we got to a real low. If it doesn't take place, it is curtains, and what our markets will look like is they'll come back and they'll look like these here over in Asia. So now let's go over and take a look at what the Nikkei did here last night. The Nikkei, has now in 16 trading days is off 22% from its highs out there. Can we expect the same thing? You absolutely, well, I don't know whether it's 22%. I haven't measured it, but we can go ahead and we can do that. But remember, we are in the unfavorable seasonal cycle out here. And we've seen a change in trend. And yesterday's pop and drop, selling that rally, folks, that was a big horn, big indicator of what is to come. We'll be right back.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Welcome back, folks. Right now, the Dow's off 9, S&P off 1, Russell 2000 down 92 cents. And let's go out to our old Kentucky home, out to Louisville, to our man Bob. Bob, thanks for calling. Thanks for holding. How are you this morning?
Well, I'm fine, and thanks for taking my call. I appreciate it.
My pleasure. You wanted to look at the IWM? Tell me what you're doing, how I can help you.
Well, what I want to do is I want to go to TZA eventually.
Okay.
But, if you want to look at IWM to see how high you think it's going to bounce.
Sure.
And then that would be the buy point on the TZA.
Yeah, I think what you've got to do here, like we were, like I was saying during the opening segments here, it's really are you using a charting system at all to track this?
I watch you on the Tiger Den.
Okay.
And what I have is stock trade and stock charts.
Okay. The bounce, the minimum bounce that we should, well, minimum bounce, boy, that's so let's take a look at possible bounce here. On the IWM, here's what I want you to be paying attention to. So on this, let's assume that we do get the bounce here because of what we've taken a look at. The piece of information, you want to see what kind of volume you've got and coming into this. And what you're going to want to be paying attention to is that June 10th area first, in my opinion. And so let's assume the IWM bounces up into 97.81. There's 32 million shares out there. Now, the IWM is the strongest of the 4 ETF indices out here. It formed a Gartley buy pattern, but it was a 0.382 Gartley buy pattern. It's the strongest of Gartleys that you could actually form out there. So, and volume-wise, although it's got some, when this thing does fall apart, it's going to move down into the April 18th area pretty quick. So I think, the TZA is one that is a good place to be looking here. But as far as where this could bounce to, it's really going to be a matter of the correlations, in my opinion, of what's going on inside the currency market. I think that will tip its hat to us as well. If the bounce here is on light volume, so if you're coming in to the area of 97.81, that's the low of June 10th. The high there is 98.80, and it's coming in with light volume. less than 32 million shares, then that's telling you that, okay, you're starting to set up. Now, what you might have to do, and I'll switch over to the TZA, Bob, you might have to really build a position if you're not doing your own chart work and you're correlating here. So as and it's best to really try to build your position off of the IWM. But I'm going to pull up the TZA for you, and we'll take a look at, spots that would make sense. Would seem to make sense here. And I'm just going to go from the low, which came in here on May 22nd, up to the high that was put in on June the 6th. And the retracement there, the 0.618 level is 31.16. So I think 31.16 is a good area. Oh, I don't know why that happened out there. Let me redo this on my chart since you
are you saying that would be a possible buy?
Yeah, that would be an area where you would look for a buy. But see, what's really going to be key, Bob, is paying attention to that volume inside the IWM, because if the volume is picking up or accelerating into that area, then you don't want to, then that's not a spot where you want to buy on the TZA. Okay. If it's light coming in there, then what you can do is that, the areas to target would be 31.16, 30.45. Those are your 0.618 and 0.786 levels. But I think what you do is you try to build a position here in anywhere. Even it could, the TZA could easily get down and test 29.54 and do it on light volume. That would be your ultimate buy.
I had that number. Well, I had 29.66.
Okay. Then if that's what you had. Yeah, if that's what you had, go with that, until proven otherwise. So it seems like you've got a strategy, but watch on the IWM, Bob. Watch that. Watch as volume comes into that June 10th area. All right, my friend?
I will. Thank you very much.
You bet. Folks, stay tuned. Well, we got hour number 2 coming up. Right now, the Dow's up 17. If you're off to start your day, have a great morning. We'll see you tomorrow.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.